2022 is wrapping up, and I'm fielding all sorts of questions about how I see our South Florida market performing into 2023 and beyond. So I've created what I'm calling my condo matrix. This matrix highlights sort of four important sets of charts and criteria that are setting the framework that are our foundation of how we're entering, how our market is entering 2023. Remember, you don't want to data dump. You want to try to pinpoint the boundary conditions, the driving conditions, the things that are really driving the activity that you're seeing around yourself. So I've created this condo matrix. And before I dig in, I want to emphasize again, as I keep saying, national news by definition homogenizes data, right? It's taking the national average, the national median, and the whole country, and you get this number, this halfway point. We're in a period of increased polarization of wealth gap, of belief systems, so forth. And I believe this is going to be playing out for the next 5 to 10 years. So in a period of increased polarization, we're going to continue to seeing disparate, different realities coexisting within our country. One example I always point out recently is that while we have this tremendous flow of wealth and talent into South Florida, we have Jackson, Mississippi, which didn't have potable water. So we have homeless situations out of control across the country. We have all these different realities coexisting, and we're in the midst of a tremendous wealth and talent migration and a reshaping of life and work around the internet. So we're going to have very different realities around the country. So the national averages and medians can be misleading. All right, so let's dig in. Point number one, median pricing. So the news loves to report on monthly movements on real estate pricing, residential real estate pricing. I'm not a fan of this because there's seasonality. Nothing ever goes in a straight line. There are little bumps. So I like to look year over year or compare pre and post COVID in our case. It's a very important thing to keep in mind. We have very different pre and post COVID markets, especially so in our high end, past $1 million, and even beyond that. When you really dig into higher end luxury, we see the current reality by orders of magnitude outperforming pre-COVID. So we have to keep in mind that we have two markets, pre and post-COVID, and that within this reality, we have a high end that's performing differently than the low end. So all right, let's take a look at median pricing. The news is reporting that nationwide we're seeing drops, et cetera, et cetera. Well, our condo market actually ended this year 61% higher. I'm sorry, not this year. The data in these charts is through November. November of this year is 61% higher than November of 2019, which was our pre-COVID reality. Year over year, we're up 15%, meaning median pricing November 2022 is 15% higher than November 2019. Now, of course, we had a surge in the market post cataclysmic event post-COVID. That surge cannot last. It will plateau around a new normal that's being defined right now, but our market's pricing has held steady. And again, the median condo price in Miami-Dade is 61% higher than it was in November of 2019 and 15% year over year. So now let's dig into that wealth and talent migration and where it's manifesting itself in the real estate markets. So if you chart resales or sales activity per price per square foot. So let's take a look at 2,000 plus per square foot for condos. This is aggregate data January through November. We have 540% more sales versus the same time period in 2019. That's 192 versus 30. We basically created a whole market segment. If we look at $1,000 to $2,000 a square foot, we're up. We have 824 versus 96, up 37%. So even that segment has gone up tremendously, but that 540% past $2,000 a square foot, that's over 6x, everyone. That's a whole lot. And that speaks to the appetite of the buyer that is coming, and they want newer product. They're used to paying higher prices from where they're coming from, and they're moving here. You know, we hear stories about developers selling out bigger floor plans before smaller floor plans, and new dev, which is new because people are moving their families here. So that's really tremendous. And so this year, by the way, through November is over last year for sales of over $2,000 a square foot. It has not slowed down, and that would be the upper peak of Miami-Dade County luxury condos, the luxury segment. So it is outperforming. It's a whole new, again, I could keep saying a whole new market segment has been created. All right, so now if we look at inventory, this is a big boundary condition. So sub-$1 million inventory is down 59% November 2022 versus November 2019. That is over half. That's down almost 60%. So that is a real floor on the market. in the face of these rising interest rates, which of course are affecting carrying costs and all those things and affecting people buying more normal priced homes. But we have a massive, massive drop in inventory. Over $1 million inventory is down 29% from pre-COVID. And flat year over year. But now let's compare this with actual sales volume. So over $1 million, we're still up 167% sales volume, number of sales versus pre-COVID, again, while inventory dropped 29%. So that's a supply-demand shift. And for sub-$1 million, we're still up 31% versus pre-COVID, while that inventory dropped 60%. So that's a real floor to that market also. I will point out, though, that sales volume for sub-$1 million for condo and single family is down significantly this year over last. Those would be the segments one would think most affected by interest rates, all those things, and also that inventory crunch. But over $1 million inventory, while off the highs of last year, is still up 167% versus pre-COVID. That's just $1 million plus. But again, if we dug down per square foot, getting to the upper echelons of the luxury market, $2,000 and up a square foot is up 540% versus pre-COVID. And again, that blows my mind. That's a whole new market segment, and it speaks to the appetites of the buyers and the wealth and talent migration that is underway. Now, I'm going to end with one of my favorite stats is the all cash statistic. Below $1 million, condos Miami-Dade, January through November of this year, 50% all cash. Over $1 million, 66% all cash. That is another floor on our market as interest rates sort of add some friction to these wheels, and as the market plateaus around a new normal. So what I think is going to happen next year, I think the inventory crunch and interest rates are going to continue to affect sales volume below $1 million. The floor in pricing is kind of there, again, because of the lack of inventory and because of the relatively high percentage of all cash buyers even below $1 million. Above $1 million, I think there's still going to be great demand at the upper ends of luxury as we continue to attract wealth and talent, as our feeder jurisdictions increase their hostilities towards capital. California's mansion tax takes into effect in April, which is amazing to me because they had one of the biggest exoduses of taxpayers in the last few years, and now they're increasing their hostilities. That's that negative momentum cycle I keep talking about. So I think that the higher end of luxury is going to keep seeing demand, but it is going to plateau. Nothing can go up like this forever. There was an initial surge post-COVID, and now it's normalizing. And there is a very distinct post-COVID reality at the higher price points that is reflecting, that reflects the appetites of the wealth and talent that is migrating to us. So that is the market preview for condos. Stay tuned for single family. It's going to be a great year, everyone.